Yes, sir.
Okay, thank you.
It's a sound, sorry. बरोबर नाही.
Speaker.
एक बार मैं check करता
यहाँ पे आप माइक को म्यूट करिए।
हूँ. Okay, is my voice audible? Kindly please confirm. System is on mute.
Yes, yes, sir.
Okay. Thank you. Can you see me also?
Yeah.
Thank you for confirming.
मला ते ऐकते ते
তোমার ভিডিওটা অফ করে দাও তো যেমন এইটা দেখ এটা ফুল স্টপ ব্যাস ঠিক আছে না
Kindly please confirm if you can see the slides, the screen.
Yes, sir. Yes.
Okay, I think there is a lag of 2-3 seconds of the new slide appearing after I shift it, after I move it. I think lag of 3-4 seconds. I think that can be managed. Yes.
Okay, no issue.
Okay, thank you. Just a moment.
So I'm Jaya Basu. I'm the regional director here, Eastern Region, and I welcome everyone in this session on closing of GST books of accounts for the financial year 2025-26 and recent developments in GST. So we have Mr. Ishan Tulsian. He's a close associate of EEPC India, and we keep on doing sessions at crucial time as far as the GST filing is concerned. He's a partner of R.Tulsian and Company, Kolkata, and R.Tulsian Global. So we are organizing this workshop with an objective that at the beginning of the new financial year of 2026-27, we are going to focus on practical insights for accurate GST reconciliations, compliance readiness, and audit preparedness to ensure a smooth closure. So, and key topics of discussions are year-end GST reconciliation, ITC and supply review covering eligibility, reversals, outward and inward supplies, RCM, unbilled advanced and advanced adjustments and cross-charge considerations. Key GST updates. GST, we keep on getting updates, so we'll also cover key GST updates, including GST 2.0 developments, recent circulars and compliance changes for financial year 26-27, e-invoicing, QRMP, HSN and thresholds, and how well we are prepared for the audit, that is, and common departmental focus areas and litigation risk mitigation. And So we'll be covering these topics with the help of practical case studies and actionable takeaways for exporters. So before taking much time, I'll hand over the mic to Mr. Ishan,
Thank you.
who will be giving a presentation. And after that, everybody is free, all the attendees present physically as well as virtually. They can ask questions.
Is my voice audible? Please confirm. And can you see the screen also? Can you see me so that we can begin? Can you see this shared screen? I'll just make it full screen. Hello, participants, delegates, kindly please confirm if you can hear me and if you can see the screen.
Yes, sir. Yes, sir.
Okay. Okay. First of all, I would like to thank all of you present here today for having taken out time today on a weekday to learn, to understand, today's topic, which is closing of GST books of accounts for financial year 25-26, and also the recent developments in GST. I would like to first extend my heartfelt gratitude and thanks to the EEPC board, to Jaya Basu ma'am, the regional head, to Kaushik Bhattacharya ji, the assistant director at EEPC India, and also to all the participants here joined virtually as across India, as well as people who have attended physically here. So let us just begin. My introduction is I'm CA Ishan Tulsian. I am partner at R.Tulsian and Company. And we've had sessions earlier also with EPC. I think we've had more than 10-15 sessions over the last 3-4 years. And this is about my firm. This is about myself. We will share the PPT with you. So I've tried to make a very exhaustive PPT as there are few delegates who have joined here who have also attended my sessions earlier. So they understand that I try to make a very exhaustive PPT presentation wherein I put in everything. I try to cover as much as possible in 2 hours, but it is actually not possible to cover everything in 2 hours. So we are going to lay focus on the important areas, and I will touch base on the other areas as well, but the PPT belongs to you, so you can connect with me later also. Okay. So let us first understand the action plan for financial year 26-27. Now, considering it's March 2026, now for 2025-26, we need to plan for the financial year 2026-27. So ideally, what should be the checklist for every business exporter in the month of March, which ideally we should have done, say 20-24 days earlier. Okay. So we are aware of e-invoicing provisions, right? Let us just briskly go through these. We are not going into details because the PPT is there with you, and these are just theoretical parts. As ma'am had mentioned, we are going to go through practical slides, notices, points of where we need to lay emphasis in finalization of our books of accounts, in our tax audit under Income Tax Act, as well as tightening areas and internal controls and preparing ourselves for a departmental audit under Section 65 in the future. So let us just touch upon these areas. So the things which we need to remember in the month of March, or perhaps now in April, for the ensuing financial year 26-27, first we need to understand that for the e-invoicing provisions. Now, as we are all aware, for e-invoicing provisions, yeah. So for e-invoicing provisions, if you were to see from August 2023 onwards, if any GST and any PAN-based business all over India, cumulative with all the GSTs across the states, the annual aggregate turnover for any financial year from 17-18 till now, 25-26, 8-9 years, if the annual aggregate turnover exceeds 5 crore in any of these financial years, then we need to comply with e-invoices. Now, what is e-invoice? We are aware we need to upload our invoice which we generate from the accounting software. We need to upload it on the invoice registration portal, IRP, and then a QR code and 64 character IRN is generated, and that again is required for validation. Right now, in case if we do not confirm, if we do not adhere to this, then there are hefty penalties. Per invoice violation, there is 25,000 penalty for incorrect invoice, and for non-compliance, it's a hefty penalty of 10,000 or 100% of the tax per invoice. So we need to be very careful. We need to take into consideration all the previous years, right? Now, the second important thing is that from April 1st, 2025, if you were to see this slide, that the the e-invoice generation mandate is not indefinite. It has been curtailed to a time period of 30 days from the date of the invoice itself. Now, this is not for all the businesses for which the annual aggregate turnover is more than 5 crores. It is still for all those businesses for which the annual aggregate turnover is more than 10 crores. So, if your annual aggregate turnover is below 10 crores, so you may not be curtailed to generate your e-invoice within a time period of 30 days only. You may generate it after 30 days also. But if you have, have an annual aggregate turnover of more than 10 crores, so once you upload your invoice on the IRP portal after 30 days, so the IRP portal will reject it. It will not generate an IRN. Now, what happens is, in that case, you are jeopardizing, means you are endangering the claimability of the input tax credit for your recipient. Because what does Rule 48 Sub Rule 4 say? It says that every taxpayer who is legally obliged to generate an e-invoice, means more than 5 crore turnover, has to generate an e-invoice. Otherwise, the sale invoice has no validity. So if the sale invoice has no validity, now when a departmental audit happens, if you are the recipient, if your supplier has not generated an e-invoice, so at that point in time, it would be a challenge for you to claim that input tax rate. They may ask you to reverse it. Right? So that's one thing which we all need to understand. Now, if someone were to ask me, sir, galti ho gaya, for 30 days we could not generate. Now on the 31st day or the 35th day, what do? The IRP portal is not accepting only. So I would say cancel that particular invoice. Cancel that invoice, regenerate an invoice. Now it may be a problem because initially you've generated an invoice, add as a particular invoice number, it has an e-way bill also. The goods have already been transferred to the customer. Now that invoice, now the last case scenario is what? That invoice has no legal validity. So you go back and you cancel that. Now, how can you cancel a particular e-invoice? Can you cancel an e-invoice after 24 hours? Can you cancel it? No, we cannot cancel. We need to issue. Yes, very good. We need to nullify. I'm trying to say we need to either within 24 hours, what do? We cancel the invoice. Okay, before cancelling the invoice, we need to cancel the way bill. Right? Now, after 24 hours, we need to issue, as ma'am said, as you said, trade note to nullify that. But what will be the problem? Problem will be that if you cancel that, the same invoice number will not be taken, and it will distort your invoice numbering because you already generated several invoices afterwards. So it is advisable that you submit to your jurisdictional officer that we had this kind of an issue, that within 30 days we could not, but we nullified that and we generated a proper e-invoice to that and tag that e-way bill and everything along with that. Though e-way bill work has already been done 30 days, 40 days ago. Okay. So this is very important for us to check. Okay. Second thing, what do we need to check? The QRMP scheme. Now, QRMP scheme, as we all are aware, what is QRMP scheme? Quarterly return monthly payment. What does that mean? That if our annual aggregate turnover is less than 5 crores, then we are small taxpayers. So what we can do is we can file quarterly GST or 3B return, but every month we need to pay taxes in your challan, right? In your PMT 06 challan, I believe, right? And by the 25th of the month. Or you can also upload your B2B sale invoices using optional invoice furnishing facility, IFF. 25th is for the challan payment every month, and for your GST or 3B it is 22nd or 24th. So all the states are clubbed into two, like Gujarat, Maharashtra, Tamil Nadu, a little more developed states, they have the due date of GST or 3B filing for the quarter on 22nd, as sir said. and the other states are clubbed in other zone where the due date is 24th. Okay. Why I'm touching base is that it's important for us to understand at the beginning of the year. Now, can we opt QRMP throughout in between the year also? Can we opt for QRMP scheme between the year? Yes, we can. Composition scheme we cannot. QRMP we can. Exactly. For QRMP, from when to when is the portal open for you to opt for QRMP for the next month? Let's take, for example, April, May, June, first quarter of 26-27. When can we opt from? 1st February 2026 to 30th of April 2020. Means the first day of the second month of the last quarter to the last day of the first month of the ensuing quarter. Basically. Okay. For the quarter April, May, June. Okay, these are basics. We need to just understand that whether we want to opt or not. So I would not advise that do not opt for QRMP. Reason being is that, see, if you have B2B invoices, customers and all that, if you don't file IFF, okay, then there is no facility after the 11th, first of all. Second of all, if you make any mistake in IFF, is there IFFA, like it is GSTR 1A or anything like that? No, it is not. So why to go for that, right? Second is composition scheme. So we are aware of composition scheme, right? That is in case if we are manufacturers, traders, businessmen, okay? So and up to the limit of 10% of service, okay? We are aware of that. So the turnover limit is 1.5 crore. So what happens is, can we issue a GST tax invoice? Can we claim input tax credit? Do we have to pay output tax liability, collect and pay? No. We need to pay a particular percentage of our particular, yes, our particular taxable value we need to pay to the government. For manufacturers and traders, it is how much? 0.5%, 1%. For restaurants, it is how much? 5%. For service providers whose turnover is limited to 50 lakhs, it is how much? 6%, 3%. Okay. Now, Rule 86B, we will come to that. GST registration. Can anyone tell me GST registration thresholds? We are all aware, right? 40 lakhs, 20 lakhs. Now, if anyone is giving sale of service and goods both, then what is the GST threshold, registration threshold? 40 lakhs or 20 lakhs? Very good, it's 20 lakhs. If you are having outward supplies of sales also, services also, and goods together, then it is 20 lakhs, not 40 lakhs. 40 lakhs is exclusively for the supply of your goods. Okay. These are basics, Now see Rule 86B, very important. What is Rule 86B? Can anyone tell me Rule 86B?
Cash payment.
Yes, very good. Cash payment. What does Rule 86B mean? If you don't follow Rule 86B, what can happen? If today your auditor or you finalizing your books of accounts in the month of April, May, right, for your ensuing tax audit, for your ensuing statutory audit, for your ensuing GSTR 99C filing, or your last and final reconciliation before 30th of November 2026 for 25-26. What are the points which we are going to see? We are going to discuss these points. One of the points is we need to see whether we are complying with Rule 86B or not. What is Rule 86B? Means for big taxpayers whose taxable turnover is more than 50 lakhs per month. Taxable turnover means taxable turnover apart from exports, and exempt turnover means the turnover on which you collect tax and you pay tax, right? So if it is more than 50 lakhs, then what happens? In that particular month, for example, 60 lakhs you have. Let's see this example, you will understand. Let's see this example. What is the total output tax liability for this particular month? The output tax liability is 150 for CGST, SGST, IGST, right? What does Rule 86B mean? Rule 86B means if your taxable turnover is more than 50 lakhs for the month, so this amount of 1,50,000, you cannot use your entire balance of your electronic credit ledger, which is how much? 1,85,000. You cannot use entire 1,50,000 from this 1,85,000 to set off the entire output tax liability. So what does Rule 86B means? 1% of the output tax liability will be restricted
to be made payment through the electronic cash ledger. So, what is the maximum amount which you can use your electronic credit ledger with to set off your output tax liability for this month? It is 99% of your output tax liability is 1,50,000 into 99% of that is how much? 1,48,500 is the particular amount of output tax liability which can be paid using the electronic credit ledger, even though you may have an excessive amount of electronic credit ledger balance cumulatively still. And 1% of 1,50,000 is 1,500 you need to pay out of your electronic cash ledger, means out of your cash and bank. Why has this rule come in? This rule has come in usually to curtail the fake invoicing, so that people have to pay at least 1% of the particular sale bills which they are issuing. Earlier, what used to happen when way bills were not there, e-invoices were not there, people were just uploading invoices, their sale invoice in GSTR1, and they were never filing the GSTR3B, or if they were filing, they were not filing correctly. So here what is happening, if your turnover is more than 50 lakhs in that particular month, then you need to pay at least 1% of the total taxable, total output liability using the cash ledger. Now, why am I emphasizing on this? Reason being, if we don't follow this, and if departmental audit happens, and if your chartered accountant, tax auditor, GST auditor, everyone misses this out, and this gets caught 3 years later during a departmental audit under section 65, then what happens? They have the power or the discretion to even suspend your GSTN number. That's why it is that crucial. So this needs to be followed. Now, what are the exceptions to this? You're like, sir, I'm a big taxpayer, but that's fine. But there are certain exemptions also that you don't need to follow this rule 86B. Means you can use the entire electronic credit ledger. Means your entire amount of output tax liability can be set off. What is the first one? That if you are a company, your managing director or any of the whole-time directors for the last 2 years for which the ITR due date is crossed. ITR means income tax return under Income Tax Act. Last 2 years of income tax filing due date is gone. And for those last 2 years, he has paid income tax amount of 1 lakh or more. This is not the self-assessment tax. This is the entire tax amount before you deduct the TDS and the advance tax. Means on your total taxable income, your slab comes in that particular amount. If it is more than 1 lakh for 2 consecutive years, past 2 consecutive years, then you don't need to follow this. Right? Second, what is there in case if your company, large exporters, if you have applied for a refund in the previous financial year of more than 1 lakh rupees, then you don't need to follow 86B. And even for not exporters, even for people who have applied for refund under inverted duty structure. Inverted duty structure, are we aware? What is that? Output tax liability, 5% is chargeable. Input tax credit is 18%. So we can apply for refund for the remaining 13% as per the formula under Rule 89, Sub Rule 5, right? In RFD 01. So in case if that is also more than 1 lakh, then 86B is not required to be filed. And there is one more in the next slide, very important. For example, right now we would be filing the return for what? For the month of March, for example, March 2026, right? Now, what is this particular exception saying? From April 25 to till February 26, if for all those months cumulatively, if you have paid in cash more than 1% of your total output tax liability for those 11 months, then you don't need to follow Rule 86B for the month of March. Have we understood this? So we are not going to take into consideration RCM here. This is just purely output tax liability on outward supply sale. पहले से 1% से ज्यादा पेमेंट करके रखिए 2% 3% तो और हम 1% क्यों दे? That's the particular thing. Okay, so this is very important. We need to ensure this point is covered. Okay, see, you can go through all this composition scheme, coming in, coming out, this 30 days we've already discussed. You can go through all this zero rated supplies. LUT, are we aware of LUT? Letter of undertaking. When is the last date to file a letter of undertaking? Can anyone tell me? For the financial year 26-27. I'm a regular exporter. That's a very good answer. But if I'm a regular exporter, I have already exported in 25-26. This is not my first export consignment. For my first export consignment, ma'am's answer is absolutely correct. Before you export your first consignment under LUT, means आप government को IGST payment नहीं कर रही है. You're not paying. You're telling the government that no problem, sir. I will fulfill all the export conditions. I will get foreign exchange within 9 months. I will apply for refund properly if I will do, etc., etc. Please don't ask me to pay IGST upfront. For that, I need to file an LUT in RFD 11. That the facility is there. My question is, for a regular exporter, when is the last date to file an LUT? It is 31st of March 2020 of the previous financial year. For 26-27 was the last date, 31st of March 26. Now, if ma'am were to ask me, sir, गलती हो गया, बहुत जन लोग से गलती होता है, 31st March को बहुत pressure है. We did not file on 31st of March, and today is 24th of April. Hypothetically, my no export consignment is gone in the month of April for 26-27. Will the portal allow me to file LUT for 26-27 after 31st of March 26? Very good. Yes, it will allow. Now, is there a penalty? No, there is no penalty. Second, if consignments have gone on 5th of April, 6th of April, but LUT forgot, your CA forgot, accountant forgot, GST specialist forgot, management forgot, everyone. Today after my session, you know, oh, LUT is not filed. Tomorrow I go, I file my LUT on 25th April. But export consignment has gone on 5th of April.
They will ask for the LUT.
Is there a problem?
उसमें तो नहीं हो.
Clearance ही तो नहीं होता because of
Clearance nahi hoga, but in case if for services, for instance, if you have export of services, so what can be the consequences? This is a valid question. Many people ask, sir, LUT file karna bhul gaye. We have done export of services or goods, hypothetically. So now what happens is, theoretically, you need to pay the amount of IGST
With payment of tax.
with payment of interest. Tax is IGST with payment of interest for the period 25th to
20.
the export, like from the date of filing of LUT to your actual export, like, you know. And then once you export, then you can get the refund of that IGST. But will you get a refund of the interest?
No.
No. Is there harassment? A lot of harassment. Will you get refund straight away? There will be a problem. So, what is another checkpoint? We need to file the LUT RFD 01. Job worker. We are finalizing our books of accounts. We will see the notices also, you know, practically. Now, for job working, for example, I am sending my goods to a job worker outside my premises. Do I need to issue a tax invoice? Is it a sale? Is it an outward supply? No, it is not. It is not a sale. We can transport by using delivery challan and e-way bill, right? In Bengal, West Bengal, do we need an e-way bill for job working? Intrastate.
Interested.
It has been repealed back December 2023. For interstate, do we need? Interstate we need. Now, my question is, what is the time limit for the goods to come back after job working? The inputs, it needs to come back within
6 months.
1 year. For 6 months, it is if you give sale for upon approval basis. You need to get it within 6 months. But this particular case is job working.
एक साल के अंदर
Within 1 year, you need to get the goods back. If you don't get the goods back, then what will happen?
टैक्स देना पड़ेगा.
Tax देना पड़ेगा. कब से पेमेंट करना होगा?
जब से वो चालान इशू किया उसी डेट से आपका
Very good. From the date that the principal manufacturer sent the goods to the job worker. Now, principal manufacturer does not take delivery of the goods. It comes directly from my supplier to my job worker. Is it possible? Yes, it's possible. No problem. Now, in that case, if the goods have not come back within 1 year, what will be the date of calculation of this interest and tax? Is the date where the job worker receives the particular inputs. What I'm trying to say, that there are so many notices which we've got for our clients wherein they don't maintain a job worker register. They don't file ITC 04. They don't have any proof of delivery challan out, delivery challan in. Means delivery challan issued by the principal manufacturer on the transportation of goods to the premise of the job worker. And once the job working is done, it comes back. the job worker, so he definitely does not issue a delivery challan. What is delivery challan? There's nothing. Or even if they do, we tear it, we throw it. Now what happens is, I'll show you a particular notice. This particular notice, what does it say? Conversion charges means job working charges. This is a notice. You did not file any ITC 04. You do not have any delivery challans. You do not have a job worker register. So there is no proof that the goods went, that it came back ever. So if it did not come back, is it a deemed sale, which we'll consider? Yes, the department will consider it to be a deemed sale. Arey, maal hi nahi aaya. Even though I would have received the goods, I would have used it, sold it, but there is no proof. So now when I'm finalizing my books of accounts, what do I need? These are the exact documents which the department needs during departmental audit, which is delivery challans, which we issue as principal manufacturer, delivery for sending the goods, as I told you, for getting back the goods, ITC 04, job worker register. How does an ITC 04 look like? This is an ITC 04. Have we ever seen this in our lives? This ITC 04. Have we ever filed this? Very good. Sir has filed ITC 04. So in ITC 04, what happens? That challan number needs to be mentioned. What are these challan numbers? These are issued by the principal manufacturer. Challan date is there and quantity. UQC is number, quantity. And department will calculate again what? How many quantities received back if it is in the same UQC. This is the details of the goods sent from job worker back to the principal manufacturer. Table 5A. What was this? The initial table, table 4. It was the goods being sent on delivery challan from the principal manufacturer to the job worker. So what will the department see? This quantity, whether this quantity has come back. If this quantity UQC has changed, I sent in meter of cloth, it came back in pieces of shirt. So I need to understand the department what is the input output ratio, and then they will calculate whether all the goods have come back or not. They will tag the original delivery challan with the challan number of the job worker. What I am trying to say, this is very important. Reason being is this notice, if you were to see, they are saying this entire conversion charges is job working. You have claimed input tax credit on this, but the goods have not come back. Kindly pay back 67,45,597 each of CGST and SGST. Your entire job worker accounting ledger they have taken, and they are saying. So this can be a very big point. So let's not goof it up during our finalization of our accounts, right? We need to see this. Now, can anyone tell me what is the current rate for job working? What is the current rate for job working? After 22nd of September, GST 2.0. For residual job working, for engineering goods, for your industry, can anyone tell me? Is it 12% or is it 18%? Is 12% there a slab anymore?
12%.
So it has been increased to 18%. But if you were to belong to certain industries where you have received the benefit of 12% being minimized to 5%, but do you belong to these industries? Industry of umbrella, certain types of printing, brakes, pharmaceuticals, leather. So these particular industries, the job working rate has been reduced from 12 to 5%. Why am I emphasizing on this? Because look at this notice. This notice belongs to 22-23. That time, what was the residual job working rate? 12%. It was 12%, right? But my job worker, what did he do? He raised the invoice at 18%. Then in 2022-23 for residual category. And I claimed input tax credit beyond 12%, which is 18% on my job working invoice. Now, during my departmental audit, can the department tell me, sir, this is 12%? I will to catch him, but you have to reverse 6% along with interest in case if you have utilized this excess input tax credit. Is this a valid point for you? Yes, it is a valid point for you to check the proper GST rate applied by your job worker. If after 22nd of September, has he applied 18% or is it still 12%? If he's applied 12%, it may be a problem for you also because you're losing out on 6%, legitimate 6%. Department will catch him for short payment of tax, but you're losing out on eligible 6%. But for 22, 23, 23, 24, 24, 25, 24, 25 up to 25, 26 up to 21st of September 25, it is 12%. In case if your job worker applies 18%, should you ask him to rectify, amend his invoice, or you will right away claim 18%? No. If you claim 18%, you will have to reverse back 59,85,127 each of CGST and SGST. This is a real life case of a client where the job worker did the error and he was asked to reverse the excess 6% input tax credit because he claimed it on 18% and not 12%. Okay. So, ITC 04 timelines we know, right? What is the timeline for ITC 04 filing?
25th.
If you're a small exporter or businessman below 5 crores of turnover, it is once a year.
Half yearly or
Once a year. That is 25th of April. 25 days after the year closure. And if you're a big businessman, more than 5 crores, then it is twice a year. Okay. These are very important for finalization of accounts. You need to keep a tab of each and everything, your IT04, ledger, accounts, etc. Okay, now tell me, my customer is forcing me, sir, your invoice number which is there now, it is very confusing, I don't like it. Your invoice number which you've done 1, 2, 3, 4, this is for instance, you are not maintaining an invoice number series. You're just maintaining a series of numerical series 1, 2, 3, 4. Many people they do that. But your customers are forcing you, sir. This 1, 2, 3, 4, 5, 6 is the same which you had in 2025, 26 also, 24, 25 also. We are getting confused. Even though legally you can again start 1, 2, 3, 4, 5, 6 from 26, 27, no problem, because it is unique for the year 26, 27. But your customer is saying, sir, I cannot manage. There's all your invoices are the same number and all that same series. So please, it is 24th of April today. Your customer, big customer, is forcing you, no, sir, ye nahi chalega. Do your company, for example, Hazelberg or whatever that, HZZ slash 2627 slash 010. So your customer is saying, please change your invoice series during the financial year. And you may not have a duplicate one, it's fine. Because it cannot be duplicate, right? Your invoice series is 1, 2, 3, 4, 5, 6. You changed it to HZZ-2627. So how is it the same? It's different. It's not the same. It's 1, 2, 3, 4. This is alphanumeric. That is only numerical. What my question is, legally, can you change your invoice number series during mid of the year or after the 1st of April? Can you do that legally?
मीट में तो हम लोग नहीं कर सकते चेंज.
We can change as long as we are reflecting it in GST one document summary.
Participants, delegates who have joined us virtually also, sir, please do contribute. Can we change the invoice series mid-year or after the 1st of April? Hello? Can anyone unmute and can respond to this? Can we change the invoice series after the 1st of April? So see, legally we can change. Yes, we can change. Why we can change? See, there is rule 46, sub-rule B, 46B. Okay. Now what does, yes, we can change. Very good. So what does rule 46B says? It says, आप change करो ना, कोई problem नहीं है. But it cannot be duplicate. It needs to be unique, exactly. It cannot be, if, for example, if you are maintaining HZZ-2627-001. So when you change your series, you make the same. No, you cannot do that. You have to have a unique number or unique combination of numbers and alphabet, letters of the alphabet. That's one thing. It cannot exceed 16 characters and you need to have a sequential order. Means 1, 2, 3, 4, 5, 6 or 10, 11, 12 or 101, 102, 103 like that. It cannot be 105, 104, 103, 100. No, it cannot be. It cannot move like that. Okay. If you satisfy these conditions, as a matter of good practice, see, this is a client. We've submitted a submission to his jurisdictional tax officer that, sir, we are changing till thus 15th of April. We have issued invoices up to 1 to 51 numerical 1, 2, 3, 4 like that. But we want to change it to PEPL / 2627 / 52, 53, 54 like that. So can we do that? Yes, we can do that. No problem. So, as a matter of good practice, just make this kind of a submission and submit it to your jurisdictional tax officer, get a receiving copy. So that during departmental audit, during finalization, and and later on, there is no dispute as such. Okay. Can we have multiple series? I have one unit in Havada, one in Calcutta, one in Jagaon. Yes, very good. Can I have multiple series for different verticals, services, goods, fixed assets? Very good. We can. Very good. Yes, very good. Okay, so these were basics and all that. Let us go ahead. See, now for finalization of your books of accounts, what is the most important part? We need to do reconciliations. Outward reconciliation means sales ka. Inward reconciliation means input ka. And RCM also. Okay, we will see. This is a very thorough presentation which I made, okay, which will go to you. Each and every slide has some bit or the other which will safeguard you during finalization, which will help you during finalization, which will give you a checklist of the items or the areas which you need to see in your books of accounts during the time of finalization or even before departmental audit. Okay. Now I have put 9 to 10 different types of reconciliation. We all do this. Reconciliation of sales, right? GSTR 1 versus GSTR 3B, GSTR 1 versus our tally books of accounts, GSTR 3B versus our tally books of accounts. Let's see this. Practically, how does it look like? We all see this. This is GSTR 1, this is GSTR 3B, this is GSTR 1 books, right? GSTR 3B books, right? So we need to do this. Second is e-invoice reconciliation. What is e-invoice reconciliation? What is e-invoice reconciliation? Let us see this. I have downloaded this from the portal e-invoice details. Now, once you issue an e-invoice, immediately what happens? Your IRN number, it goes to your e-way bill, it goes to your GSTR1 dashboard, it goes to all the platforms, right? We are aware of this, right? And it auto-populates in T+1 or T+2 day, right? In GSTR1, auto-populates means apne aap aa jata hai, T+1. If you were to see practically also, if you were to see IRN date is 4th of October 2025 and GSTR1 auto-population date is 5th of October. Okay. What I am trying to say is that all your invoices which you have issued for your outward invoices, they all need to have the certification of from your IRP portal of IRN 64 digit and QR code. If it is not there, as we have already discussed, Rule 49 sub Rule 5, it says penalty of 100% of tax or 10,000, whichever is higher per invoice, right? And no credit for your customer. So what did we see first? Books versus GSTR 3B versus GSTR 1. We have seen this practically. E-invoice reconciliation we just saw. E-way bill reconciliation. Sir, what is e-way bill reconciliation? What is e-way bill? Sir, let's see what an e-way bill looks like. This is an e-way bill. E-way bill number is there. Auto-populated what? IRN number, acknowledgement date from your IRP portal. It comes now. We all are aware of this, right? Then what comes? Billing address, shipping address, all of those things. Consignor, consignee. That is part A. Part B, your transporter, vehicle number, transporter ID, all those things. Now, what I am trying to say, let's go to the next slide. This is a practical notice which our client has got. Can anyone tell me what is the name of this kind of a notice? You must have seen in your life. This is very common. This is an attachment which comes with ASMT 10, scrutiny under section 61. Matlab kya hua? Matlab ki the department already has all this data with them. They are not doing audit. They are not asking you for your books of accounts. This data is already there with them. GSTR 1 के हिसाब से सेल आपका टैक्स कितना हुआ है GST में 35,32,000. See the top one, this one. Now let us see what do they compare? Liability as per 1, liability as per 9, what you have reported liability as per 9. See e-way bill data. They extract the total tax amount as per the way bills which you have generated for that financial year from the way bill portal. Way bill portal hota hai na alag se, right? So from there they have extracted this. Either speak in English or just a moment, sir. Okay, let me speak in English. Is there's a particular chat here? Let me just understand. The bit panel. Where's the chat box? Chat. Either speak in Hindi or slow your English speed. Okay, okay. I'll speak in English, no problem. I will speak a bit slowly. Okay. Okay. Okay, where were we? Yeah. So in e-way bill data, see if here you will see as per your e-way bill data, your IGST, your tax liability is coming to how much? 35,83,489. But as per your GSTR 3B, the tax liability which you reported is how much? 35,32,254. So as per your way bill portal, your IGST on your outward supplies, ideally which the department is saying, is 51,254 more. But you have paid 51,254 less in your GSTR 3B. Right? Similarly for your CGST and SGST. This is real life notice. Now, how do you respond to that? We have responded by making a reconciliation statement in the next slide. If you were to see. Is it moving? Yeah. This is a reconciliation statement. If you were to see on the top, there is liability of sales as per your way bill, right? Which the department has mentioned. Right? See IGST 35,83,489. And see at the bottom, liability of outward supplier declared in 3B. So you need to make adjustments in between, right? So what adjustments are there? Are there any sales where e-way bill is not required? Are there any sales which you make where e-way bill is not required? What is it?
Threshold limit was
Very good. Threshold limit. What's the threshold limit? 50,000 interstate, and interstate is very good, 1 lakh. So sale is there, 3B is higher, but e-way bill sales is lower. So you're going to add plus, right, to match your e-way bill data with your 3B. So 2 though you've already answered. Now, for services, do you need e-way bill?
no.
So you need to also add that to your e-way bill sales data, because in your GST or 3B, you already have sale of services recorded. If you are issuing credit notes for those sales which are below the threshold, so are you reducing the sales from 3B? Yes. But are you issuing e-way bill for credit notes? No. Because an original movement, it was below the threshold. When it comes back, it's below the threshold. So you need to reduce. Plus minus, this is a reconciliation exercise. This is extremely important for accountants and chartered accountants and GST team of our companies to do this reconciliation. When? Once in the month of April, March, so that once we file our GSTR 3B and GSTR 1 return for the month of March 2026, for 25-26, we can rectify it within the year itself. Or otherwise, we can do so up to 30th of November 2026. Right? We are aware of this, right? This is another notice, practical notice, which I've just moved to for another client. It's taking a long time, दादा. ये काफी टाइम लग रहा है, ये 15-20 सेकंड हो गया.
10 सेकंड में नॉर्मली रहता है.
अभी बहुत काफी टाइम ले रहा है. Okay, this is another notice. If you were to see liability as per e-way bill, 73,53,000, and liability as per 3B is 70,17,000. So you paid 3,36,376 less of IGST. Now kindly do the reconciliation. This is a notice from 30 days ago from a client of ours. So this is very, very, very important. Okay. Now, let us go to the first one, this one. I think there is a lag. It's going. Okay. Now let us see this. Reconciliation between AIS TIS 26 AS Are we aware of AIS, TIS? What is AIS, TIS? Annual Information Statement. TIS is Taxpayer Information Statement. And Form 26 AS, we already know, where whatever TDS credit which we get means if any customer of ours pays us amount, he deducts some TDS if applicable. So he will deposit it to the government and that particular amount will reflect in our AIS, TIS 26 AS, which we can take as a credit when we are filing our ITR. This is under Income Tax Act. Okay. Now, why do we need to reconcile the sale amount shown in our AIS, TIS? In 26 AS, now for the last 2 years, the monthly sale from GSTR 3B is not being tagged. It is directly going to our AIS, TIS. So, in our AIS, TIS, if you were to see, here, this is our AIS. Total turnover as per AIS. This has nothing to do with GST. This is income tax document from income tax portal. But they are merged. As we will see on the screen, this is an extract from an AIS where the total turnover for the entire financial year is mentioned of 5 crore 32 lakh 57,491 and monthly sales are coming. Can anyone tell me that this data is being fetched from GSTR 1 or GSTR 3B?
Just the three.
GSTR 3B. This they are taking from GSTR 3B. So, do we need to reconcile this? Yes, we need to reconcile this. अरे क्या गड़बड़ उधर अपलोड हो गया, amendment की, amendment आया नहीं आया. If there can be any problem, right, we need to verify whether the total turnover as per our AIS, TIS, as per our income tax portal, whether it is matching our GST turnover as per our GST portal, right? So let us see 5 crore 32 lakh 57,491. Is it matching with our GSTR 3B total? 5 crore 32 lakh 57,491. Yes, it's matching. In the next slide, if you were to see, we have made a reconciliation of the total sale amount for the entire year in GSTR 3B. So this is matching. But we need to do this during finalization. What is next? TDS credits under GST. Is there any concept of TDS under GST? Can anyone tell me?
गवर्नमेंट जो काट के जमा करता है वो वाला ना.
Very good.
So I have a question.
Scrap sale.
Yes, sir.
Recently we are seeing this, like I face this issue, like government party, we face this with, mainly we faced it with Department of Atomic Energy. We raised an invoice on a particular GST. Now when I went to claim that
Exactly.
TDS,
They deducted an
some
other,
GST,
yeah.
and it's also
Yeah.
separate.
See, ma'am has a very good question. It is there in my presentation. What is ma'am saying? Ma'am gave a particular service or supply of goods of more than 2.5 lakh rupees to a governmental department. Please, sir, please discuss this point in detail. Okay, sir. Ma'am, we will discuss this point in detail. What is happening is, ma'am is saying that she supplied supply of goods or services more than 2.5 lakh, okay, to a governmental department or a governmental company which has more than 51% stake of the government, okay. Now, what happens is, for reducing bribery and all these particular violations and all that, the department came out that whenever the government will make any payment to the contractor, and if the invoice value is more than 2.5 lakh INR for that particular transaction, for that particular taxpayer, they will deduct 2% TDS. And what will they do? They will file a GSTR 7. They will file. Government department, we will not file. Government department will file GSTR 7. They are deducted 2% of what? Taxable value, not invoice value. Taxable value. And they withheld that payment of yours. They withheld it, na? Aapko to 98% hi mila. 2% you got less. But that 2%, what they do is, next month, 10th of the next month, before that, and by then, they file GSTR 7. In GSTR 7, what happens? They need to mention your GSTN, they need to mention your taxable value, they need to mention the amount which they have deducted. I will show how GSTR 7A looks like. They will file in their GSTR 7. What will happen? Once they filed in the GSTR 7, TDS credit, accept or reject, it will automatically appear in your TDS TCS returns, their portion. In other services, you will go. You will go there, you will accept it before filing your GSTR 3B. Once you accept that, automatically there is a system generated TDS certificate in GSTR 7A. Right? Now, that TDS certificate GSTR 7A, it gets automated, right? What is that? What does that certify? It certifies that 2% TDS deducted that has come into our electronic cash ledger. And we can use that against payment of our output tax liability. Entire process we've understood this, right? Now, ma'am is saying that many times the department, the government, company, they deduct the TDS from your GSTN of Calcutta, West Bengal. But you have another unit under the same pan, for instance.
That's not the case. The case is we have one GST. We are operating only in West Bengal. We have one GST.
Uh-huh.
Department of Atomic Energy, they have multiple GST. When we raise the invoice, we
Okay.
raised on a particular
GST.
of Department
Exactly.
of Atomic
Exactly.
Energy, but the TDS credit,
TDS credit,
it is on a different.
it is coming from a different GST and which is not matching with your sale invoice.
Not even,
Yes.
even the PAN number is.
PAN number is different. So here, what will ma'am do? Now, what ma'am will have to do? Ma'am will have to ask the government department to make an amendment.
They're not doing it.
But they will have to do that.
Because and this thing did not happen with one company. It is now we are seeing it is repeatedly happening.
Now
with
see,
multiple
prima facie, ma'am will not face an issue where? Ma'am will not face an issue in the reconciliation of sale amount. Why? Because if the department or if the chartered accountant opens your electronic cash ledger and it sees 1% of cash deposited, it will back calculate and it will see what is the sale amount which you should have reported in your GSTR1. If she has reported it correctly, the amount, there will not be a mismatch. But there will be a problem for the entitlement of getting that 1% in the cash ledger, because if if the departmental audit team from the department, they match your sale invoice which has a mentioning of some other GST and some other state code of that particular government department, but that particular GSTR 7A is showing a different GSTR, then there may be a problem. Here in this case, you will have to ask the department or you have to write to the
We
department.
have already mailed them, both the companies.
You will have to take it up with the jurisdictional officer of that particular department. You need to write them and get a receiving copy for your own thing.
We cannot give you anything in writing, but the government parties, everybody is doing this only. You raise invoice.
This is incorrect. Why I'll show you in the next slide. See this one. In the next slide, ma'am's point is very relevant. Ma'am has accepted this. This is TDS credit received. This is 2%. 5,300 is 2% or 2,65,000. This is fine. But now, see the next slide. Form GSTR 7A. This is where the problem will be. Because if you were to see GSTN of the deductor, the GSTN of the deductor will not match with her sale invoice, the recipient. So, prima facie, there may be a problem regarding that.
What is the solution?
Solution is this only, that they can amend. You will have to, if they are not listening, you need to have at least a proper trail of your emails to them that you have attempted to reach out to them to ask them to amend that particular incorrect GSTR 7 filed from that different GSTN. That needs to be nullified. And GSTN 7 needs to be filed of the future months. They need to upload this particular, deducting this particular 1%, they need to upload in the next GSTR 7 of the correct GSTN of the department. Then it will reflect properly. So, but the problem again is that you have availed that 1%.
We waited. It was of November. We sent them a mail. We kept the copy with the TDS certificate, and then we gave.
I would advise that you should write to your jurisdictional officer. You should write to the departmental jurisdictional officer. How would you find the jurisdictional officer or the jurisdiction of that particular government department? Is that you go on the GST portal and you do search. So there you will see that administrative office, find that where the jurisdictional office is, and then you can either email them, or I would advise that submit a hard copy so that you have a receiving copy with you.
Get a receiving
Yeah,
copy.
yeah. Receiving copy you take. But ideally, see, there won't be a mismatch of ma'am's sale in her GSTR1 with the amount which is reflecting 11% in her GST, in her electronic cash ledger. So prima facie there is no mismatch as such. But if you were to go deep down, so this case will not come in your ASMT 10. This case may come up in your departmental audit.
I was actually having an idea since it happened with multiple government bodies.
Yes,
Is there
yes.
any change or something? But when I read
Government-
that, there's change.
No, but this is incorrect, ma'am. You should represent and you should write to them. You should write to them. Okay, what is the next reconciliation? Physical stocks versus book stocks. Do we need to have a parity between a physical stocks versus book stocks? Otherwise, what will happen if someday the GST anti-evasion team or investigation or DGGI team comes in with an INS 01, which is an inspection notice, and the first thing which they come and they do is your stock counting. So once they do stock counting, that to their way, their methodology, which also can be debated. It may not be very scientific. It may not be very thorough. But if they were to find out that your book stocks is 100 units for a particular item, but your actual stock, physical stock, is only showing, for instance, 50. So what does it show? What does it mean?
हायर वैल्यू में देख क्लोजिंग स्टॉक देखा है
कच्चा का 50 में बेच दिया. Means unaccounted sales.
टैक्स नहीं
Let's say, and this may trigger an income tax notice also maybe a few years later. Undisclosed income. Section 68, Section 69, all of those things, right? Of the erstwhile Income Tax Act. Second case, in case if they come, they do stock counting. Let's see the other way around. Your physical stock of count of raw material A is, for example, 20 units. But your actual stock is 25 units. What can this signify? Unaccounted purchase.
बुक्स में
You not accounted it in your books. Unaccounted purchase.
अकाउंट फॉर नहीं
What does this mean? This means kacha kharide. This also has an implication that reverse the input tax credit in case if you have claimed for those 5 units if it is there in your physical stock.
सर हम लोग तो लोकल परचेज भी कर सकते हैं ना तो मतलब मान लीजिए कैश अर्जेंट बेसिस में साइड में काम के लिए हम लोग
Very good question. If you have purchased locally on an urgent basis, is it possible for you to do accounting right then? No. But what if the next day the investigation team comes in and they will see in your production floor that local purchase units are lying down, but in your tally or in your books of accounts there is no record of that.
हो ही सकता है
So what will they say?
लोकल परचेज किए वहाँ पे साइड में अर्जेंट काम के लिए
But this should be there.
The bills need to be there, but why have you not accounted for? There will be a problem, is what I'm saying, ma'am. I'll show you real life notices of what I'm talking about. And these cases, these usually get flagged due to some fake invoicing case or something else. But once they get access to your premise, they will do stock counting. Let's see this. This is a release of goods letter. Means earlier there was a seizure, there was a confiscation. So there was an inspection. They came for physical counting of your stock with your books. But they could not find proper consumption register. They could not find proper production or manufacturing register. And now, what have they done? They have done a reconciliation, which I was just talking about. This is from the department. This I have not created. This is a department release order of goods which they have seized because of mismatch between the actual goods available on the production floor or in stock and with the book stocks. Let's see here. Let's see the third column. Number of goods. Closing stock as per books. How much it is? 41 plus 850 for item number 3 and 4. And number of goods physically found as on the day of inspection. How much? 51. So 49 is matched up to 51. 49 is there in books, 49 is there physically also. They have released 49. But they have further held on to 2 unit of this particular raw material, saying it is not accounted in your books of accounts.
सर हम लोग को साइड में क्या होता है मतलब रियल लाइफ में बोल क्योंकि हम लोग को साइड में जब काम होता है ऑन एन अर्जेंट बेसिस में हम लोग को लोकल रात को 10 बजे यूनिट खराब होता है तो लोकल परचेज जहाँ से किया वो अनरजिस्टर्ड पार्टी हम लोग रजिस्टर्ड पार्टी है तो वो तो बिल तो पक्का नहीं दे रहा है तो हम लोग तो उससे परचेज कर रहे हैं, तो उसको अकाउंट फॉर कैसे?
नहीं देखिए, पक्का bill unregistered both are different things. Okay, if you're purchasing from an unregistered vendor, he still needs to give you a pakka bill without GST. It will be a tax invoice, but not a GST tax invoice. It will be a commercial invoice, if you were to say. But कहीं पे ये रूल नहीं है इनकम टैक्स में क्या जीएसटी में कि कच्चा इनवॉइस देगा एंड ऑल दैट. नो, it's a proper invoice on his letterhead. He needs to follow those particular rules. If he's unregistered under GST also, no problem. You will account for the inward supplies, means your purchases in your stock register, in your tally or your accounting system, on the basis of those invoices. Delivery challans, material receipt note, requisition, purchase orders, GRS, good receipt note, delivery challans, consignment notes, bill T, lorry copy, lorry receipt, payment slips. ये सब जो मैंने अभी आपको बोला है 10-12 नाम, these will be your safeguard in case if you are unable to substantiate to the department that you have not received the goods. There is one more case for that, I will show you. What I am trying to say that always and try to always have parity between your actual physical stock and your book stock. Maybe you may not account that very day, but at least have a good practice once or twice in a week. You should account for all your invoices, right? Otherwise, there may be a problem. Now, what was the other reconciliation? Goods in transit. What is this? This is a notice. This is a notice. What does it say? It says that we have checked your purchases from your table 8A. 8A we all know, right? GST 2A to B. Our purchases list with the department. And I have checked your purchase register and your GRNs, delivery challans, lorry receipts, all that. And I am seeing that you are receiving the goods on the 4th or 5th of May, but your invoices are dated on 28th, 29th of April. And you are claiming input tax credit on those invoices before you are receiving the goods in the month of April. You have received the goods only on 4th of May, but your purchase invoice is dated 28th of April. 100 kilometers one day, right? 200 kilometers one day, not 100, 200 kilometers one day, right? We are aware of this validity for e-way bill, right? So let's see the next, this one. What are they saying? This is a real life notice. Date of reaching is 4th of June 2022. Date of purchase invoice is 24th of May. And you have claimed the input of 74,520 tax in the month of May. Whereas you should have claimed it in the month of June. We are all aware, right? One of the conditions to claim input tax credit is that the goods should actually be received. That is section 16 subsection 2 clause B. And in that month itself. So here what will they say? Will they ask you to reverse the input tax credit? No. They will ask you for the interest for 1 month. Why will they ask you to reverse your input tax credit? Next month you receive the goods.
Okay.
And you're satisfying all the conditions. But you have claimed the goods 1 month, claimed the input tax credit 1 month earlier. So what entry should you make? You should make purchase account debit, unclaimed ITC, ledger account debit to vendor or bank. Next month, when the good comes in, what will we make? The entry, input tax credit account debit to unclaimed input tax credit. So this means in April, I have recorded my stock in purchase, but I have not recorded my input tax credit in the input tax ledger. I have another ledger which is called unclaimed or pending input tax credit, right? This is very important. And this is your finalization point. You need to check whether these goods have actually been received in the month you are claiming the input tax credit. What is the next point? Which I was saying. I was talking about all these things right now, right? Consignment note, delivery challan, or evidences that the goods have actually been received by you. Why? Because as we are aware now, when way bill is there, e-invoice is there, proper tracking is being done by the DGGI or by the GST intelligence wing of the movement of goods from one place to the other. So, if you are purchasing goods from Gujarat to West Bengal here, Kolkata, Howrah, and there are 10 checkpoints. But if you have crossed 9 checkpoints, you have not crossed one checkpoint, which is Howrah, to enter. So they will flag you 2-3 years later and they will give you evidence, RUD1, relied upon document 1. They will say that, sir, you have claimed input tax credit. It is showing in your 2B, 2A. You have claimed in your purchase register. But as per our intelligence report, either this truck does not exist, there is no route permit, or that this truck has not passed this toll point. So kindly reverse the input tax credit which you have claimed on the entire consignment from this truck, along with interest and penalty of 100%. Is this, will they flag this as a mistake or a fraud case? Fraud case.
What case?
You've not received goods, but you claimed input tax credit. This is a fraudulent case. So in that case, you've torn all your delivery challans, consignment notes, payment slips 3 years ago. How will you justify now? Very difficult. Are these cases practically being resolved at the adjudication level, or are they going in appeal? They're going in appeal. Are they being resolved in appeal also? No. For fake invoicing, for goods not actually received, these violations, even many cases in the at the first first appellate authority also, they're not giving a favorable order for that. Let's see this particular page. This is real life notice.
So what's the end result of
End result is you need to, as sir said, end result is this slide. Let's see this slide. I have mentioned 12, 13 different types of documents which we need to keep. And for instance, as sir said, how will we prove? Sir, I am a trader, for instance. I have bought stainless steel. So when I bought, I engaged a transporter. I had payment slips. I paid it somewhere. So payment slips are there. Transporter consignment note is there. Payment to the transporter. Bank statement highlighted. If I have bought, there should be an way bill. There should be e-invoice. If I'm a trader, I'm selling it also. There should be a inventory ledger. Stock in, stock out. Whom have I sold it to? I need to have those ledgers. Have I got money from them? I need to have bank statements. I need to have written the transporter or the outgoing transporter. Outward transporter is also there, na? वो तो अपना हाथ का आदमी है. I will have to ask him to give me an undertaking. It's very, very cumbersome. You have to prove right from the point of PO, purchase order, till the point of delivery, and even after that, that there is a proper chain. And if you are a manufacturer, then what? You will have to further prove that these goods which I have, raw materials which I have bought, they have been subsumed in the furnace or in the manufacturing unit. Will it be easily provable? You will have to show them your input output ratio. There will be normal wastage. There will be a lot of issues practically which we've handled. But my article, I've written a very long article. This got published in the GST journal also of ICI. This was distributed to the honorable parliamentarians also and CBIC. So here I've mentioned proper case study, which I've mentioned to you that you need to have all these documents. And this is a disputable, contestable case. Audit team will not leave it. Adjudication team, when it goes, will not leave it. They will give you a adverse order. First appellate authority will not leave it. Maybe now GSTAT is formed. Now with voluminous documents and with proper trail, you may be able to prove to the bench. Right? See, these are, what are these? These are route permits, RC status of the lorry. You have to even take this out from the Parivahan website. That this lorry number, which is mentioned in my way bill, it had a route permit. It had that capacity of ton. It had that validity at that point in time. It had national permit. So these things will help. How cumbersome it is. Okay. Now, what next? Reconciliation advances. What is advances? Now, once I receive an advance from someone against goods, In which month do I need to pay output tax liability? In the month where I issue the invoice or in the month I receive the advance? Here my question again. I am getting advance against the supply of goods. So I am issuing the invoice the next month. For instance, in the month of May. But I have received the advance in the month of April. Do I need to report this particular advance which I have received against my provision of supply of goods? Do I need to pay GST? Very good. Against goods advances, this has been removed from November 2017. If there is a provision of service, then if you have received an advance, where do you need to report it? For instance, my total supply of service is 1 lakh, but I have received an advance of 20,000 to begin the work. So this 20,000 I received in the month of April, but I will do the work in the month of May and then I will issue the invoice of entire 1 lakh in the month of May. This 20,000 which I have received in my bank account in the month of April, do I need to report and pay tax on that? We need to report it in table 11A of GSTR 1. Right? Advances, unadjusted advances. And we need to pay tax by reporting it in a normal table 3.1, normal sales in GSTR 3B. Next month, fast forward, I am issuing the entire invoice of 1 lakh. 1 lakh includes 20,000 of advance. Now what happens? What do I need to do? 90% people, they make this mistake till date. And this provision is right from 1st of July 2017. Can anyone tell me what is the entry here? Entry means treatment in GSTR 1 and 3B. 20,000 which I have shown as unadjusted advance in table 11A of GSTR 1. First, I need to remove that because I have issued an invoice of 100%. So I will issue the invoice and report it in table 4A, normal. Entire 1 lakh has gone there. So 20,000 if I let it be, so it will be 1,20,000. So I need to report it in 11B. And reduce this unadjusted advance with adjusted advance. Nullify. So 11B, I report in the month I issue the particular invoice. Case of advances received. What is the question, sir? Chat. Just a moment. Is it applicable even in the case of advances received against exports? No, sir. In terms of exports, if you are try to use the logic in case if we are selling under LUT and bond. So the main supplies only does not entail your IGST. If you receive any advance, do you need to pay IGST? You don't need to. So in exports it is not. But in domestic supplies it is. Is there any due date to file? Yes, sir. There is a due date to file GSTR 7, not by you, but by the government department by the 10th of the next month. What is our due date for GSTR 1 is 11th. Right? It will be applicable for a scrap sale also. Yes, for TDS, for TDS scrap sale, sir, it is applicable. Very good question. But it is not necessarily for the government body. For instance, let's take an example, metal scrap, not all scraps. If I have wood scrap, do I need to have TDS? No. Metal scrap under chapter 72 to 81. If we are having metal scrap, for instance, if I am purchasing metal scrap from who? From a registered scrap dealer. What will happen? I will, when I make the payment, I will deduct 2% TDS. So now sir's question is that in case if the registered scrap person, that person is a government department or central government. If central government is particularly selling us, do we still need to withhold? Yes, we need to withhold. Now, for example, for scrap, the person who's selling us is unregistered. Bangalawala, unregistered guy. So, what do? We pay RCM out of our pocket. Okay, and we claim input tax credit and on the basis of self-invoice. Right?
सर हम लोगों का जैसे होता है सर, कोई प्लांट में मान लीजिए डिफार्बिशमेंट हो रहा है, वहाँ पे हम लोगों का गुड्स भी दे रहा है, सर्विस भी दे रहा है, उसके अगेंस्ट पे मान लीजिए हम लोग को एडवांस मिला, तो वो कैसे सेग्रीगेशन करे कि वो एडवांस हम लोग को सर्विस के अगेंस्ट पे मिल
Sir, goods or service together, that is always called a works contract. So works contract is all usually done on immovable property. Or if it is movable property, it is called job working. So what is the nature of your contract? Is it on immovable property, commissioning, erection, something like that? So that will be called works contract, right? So for works contract, what is the works contract? Is it a supply of goods or supply of services? Services. So it's supply of services, advance we've received. So what will happen? To answer your own question. Now, these are basic things in the sense that, finalization of accounts, when we are doing internal audit, our chartered accountant or our own team, what do we see? We see that the invoice which we've received from a supplier, state code is correct or not. For example, our supplier is in Tamil Nadu. He is giving us matchboxes. It's coming to West Bengal. What is the place of supply? Can anyone tell me?
supply West Bengal.
Consumption based tax, destination based tax, na? The movement is terminating in West Bengal. So the place of supply for the goods terminating in West Bengal is West Bengal. But the supplier is registered in Tamil Nadu. He will charge IGST or CGST or GST? IGST. In his invoice, his sale invoice, our purchase invoice, what state code will he mention? Place of supply is Bengal, state code will be 19, right? And he will charge IGST. In this particular slide, everything is correct. He's charged IGST here, West Bengal destination, state code 19, everything is correct. State also is West Bengal place of supply. But when he's filing his GSTR1, what does he do? By mistake, he puts in his JSON file place of supply Karnataka. Now he's paid IGST also, invoice is also correct. Goods have also reached me. Every e-way bill is also correct. Everything is correct. Invoice is also correct. But just for GSTR1 filing purpose, he is by mistake mentioned it Karnataka. Now what happens? Logically search. His GSTR1 auto populates in my GSTR 2A, 2B, na? 2B. So in my 2A, 2B, when it will auto populate, just think about this. I am registered in West Bengal. Place of supply is Karnataka, he's mentioned. And the type of tax is IGST. So Karnataka IGST, can I claim in Bengal?
No.
I cannot. Karnataka CGST, IGST, can I claim here in Bengal? No. So place of supply needs to be Bengal for me to claim IGST. It's normal logic, right? So what happens in my GSTR 2B? It comes as ineligible credit place of supply outside the state. Why? Because place of supply is Karnataka and IGST is mentioned. Can you claim that input tax credit? At that moment, no. You have to ask them to file a GSTR 1A or amend it in GSTR 1. But if 30th April is passed, what will happen?
Issue a credit note and place it.
After 30th April, can we issue a credit note? Can he issue a credit note, GST credit note?
No.
It will be a problem, a dispute. Which is a case for one of our clients for which we fought. This is from the case itself. So, please do vouching. What do you say vouching? Tick, 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 tick from the invoice as compared to what is there in your books, right? So, vouching needs to be done properly, right? Now, let's see this particular example. There is a short payment of 60,000 of IGST under RCM, right? What has happened here? You had to pay 30,000 of CGST, SGST under RCM, but by mistake you paid 60,000 IGST. So here what will happen? So in the present case, no, here what has happened is GST 2A unreconciled here, tax short paid. I have paid excess 30,000 under CGST, SGST, but I've short paid 60,000 of IGST. It happens, right, by mistake. So is there a provision to correct this? Yes, there is a provision. Do we need to pay any interest? We don't need to pay any interest. Under section 77 of CGST Act and section 19 of IGST Act. What do we need to do? We need to just pay the correct 60,000 of IGST today and claim the refund of the excess 30,000 CGST, SGST paid in RMD 01. What will be the time limit? to file this RFD 01 2 years from the date today when I make the correct payment of IGST. So it's in my hand. And I need to pay any interest, penalty? No. This is mandated this is given in the primary legislation, section 7719, rule 89(1)A. You can refer to this. So these errors we usually see. CGST, SGST, I had to make payment, IGST, I made the payment, or vice versa. Right? Fixed asset sale, motor vehicle sale. Do we know their special valuation rules for fixed asset sale? This is your fixed asset schedule from your balance sheet once you are finalizing your accounts. Here, what will you see? First, we will see addition. In addition, we will see building account. Building account addition 54,000. Now 18% on building, or if we have constructed a building on our own account, can we claim input tax credit? It is blocked under section 17(5)(d). We know this, right? For any goods or services which we spend making a building or an immovable property or renovation, upgradation, anything, to the extent capitalized in the books of accounts, we cannot claim that input tax credit. We have to capitalize also the GST portion, right? First thing. Second, what is the rule? Section 16 subsection 3. If today I'm buying this furniture, this is movable, this is for my office purpose, can I claim input tax credit on this? I can claim. So this is 10,000 rupees and input tax credit is 18%, 1,800. So 11,800 will I capitalize, or I will capitalize only 10,000 in my books of accounts?
10,000.
Very good. If you capitalize also 11 this 1,800, so you cannot claim depreciation, right? This is one portion. Okay. Second portion for disposals. What will you see during your finalization? When you are selling your fixed assets, what do? We follow a particular rule, right? What is the average age of a fixed asset under GST? It is 5 years, 60 months, right? So, what do? We have a valuation rule, which we, as per rule 40 sub rule 2, which means every quarter which I have used that particular fixed asset, 5%, points will go down in terms of the input tax rate which I have claimed. Now, let us see an example, we will understand, right? So, Mr. X sold this machinery for 1,44,550. In that, output tax liability on transaction value is 22,050, right? And when did he purchase this? He purchased this in 2017. So, how many months and quarters have gone? 1 year, 10 months, 10 days have gone. So, how many total months have gone? 1 year is 12 months, 10 months, 22 months, and 10 days, 23 months. Part of the month is also 1 month. So 23 months have already exhausted, right? How many months are remaining? 60 minus 23 is 37 months is the unvested period. So why will I get the benefit of 37 months of proportionate input tax credit when I'm selling it at the end of 23rd month? No. But I've claimed the entire input tax credit on the first day for entire 60 months. So what do? I calculate a reversal, proportionate reversal. What is the proportionate reversal? Unvested period for which I have not used the asset 37 divided by 60 into the initial input tax rate which I have claimed. So 22,200 is the reversal of input tax credit, or what is the output tax liability? Whichever is higher, 22,050 or 22,200, whichever is higher. Which is higher? 22,200 I have to pay. Whether I followed this in finalization of accounts, when I see other income, sale of plant and machinery, sale of anything, there is either loss or profit. So how do we read that from a GST perspective? We need to calculate and see the finalization valuation rules for this. Now, if it is a motor car, what will happen? If it is a motor car, what will happen? There is margin method. For motor car, it's very simple. The rule is, if you have not claimed input tax credit under the erstwhile central excise regime or under GST, so what happens is the amount which you're selling at, I'm selling my second-hand car at 6 lakhs, for example. And what is the written down value as per income tax? Either block, if you're following block, you have to do standalone calculation from the beginning. So you will have to take written down value not as per Companies Act, but as per income tax, as on the date of selling. So what is that? That is 4 lakhs in the example. Is there a positive margin? Yes, 2 lakhs. So 2 lakhs, there is a positive margin, right? So what is the rate? Can anyone tell me what is the rate for GST on second-hand car sale? It is still 12% on different categories, or it is a uniform 18% rate? Uniform 18% rate. Uniform 18% rate it has been made from January last year. So now if you're selling a small Santro or if you're selling a Mercedes, so it will be 18%. Earlier it was 12% for small cars, and for big cars it was 18%. Right? So this is as per the margin method. So you need to see all that. Now let's see this particular slide. Credits in the expenditure side. Many times what happens is, whenever there is an indirect income, what usually happens, we record it on the credit side, other income, credit side of the PL. But then many times what we do is packaging charges. I engage some third party, I pay him packaging charges, and I avail packaging charges from my customer in the accessible value. Loading, unloading, packaging charges. So I don't have the trucks now. I will pay someone and I will collect an amount adding my margin, or maybe on actual, it does not matter. What I'm trying to say, accessible value 100 rupees goods, 10 rupees loading, 15 rupees packaging. So total is how much? 125. So 100 rupees I have reported as my top line sale. But 10 rupees of loading and 15 rupees of packaging, which is also my sale, accessible value, I have, what have I done? I have set it off against the expense on my debit side. I have to pay 10 rupees for unloading. I've collected 12 rupees. So, or maybe I've collected 8 rupees. So what will I do? On the debit side, many people, they have expense of 10 rupees packaging, and they set off, for example, 10 rupees, and 2 rupees they may record. Okay. Or they set off 8 rupees. So net expense is only 2. So now what is happening? Do you have to pay GST on entire 125 or only on 100? Packaging also you have to pay, loading, unloading also, right? Because it is a part of the accessible value, right? So what is my slide saying here? For finalization, there will be many an item for which you will record the credits of those by setting off the expenses. Let's see an example. Let's see this example. This is a real life case study. What is the example? Here. 2,76,600 netted off from expenses, which is recovered from the customer as packing expenses. So this is my receipt on which GST is charged. But what have I done? I have not reported it in my top line sales, because my top line sales is clear just goods many times. So whatever other recovery which I get in the accessible value, I set it off on the debit side only. But is that proper from the GST perspective? No. You need to ensure that these amounts which are netted off against the debit side, your GST you have paid on that or not. This is a very, very big point. Second is what? I have 2 files. One is business file. What is business file? I'm doing trading of, for example, samosa. Okay. And second is, in my personal file, I have rental income. Personal file, business file. Personal file मतलब क्या हुआ? मेरा खुद का घर. I've given it for some office rental. So that house property income, or that income, now it will not be considered house property anymore, etc. But in case if I've given that particular income, GST is to be collected and paid, yes, because I am registered under GST, and it is a GST specific transaction rental. But will that go in my business income, in my total turnover? No. Turnover is my sale of samosa. But when total GST turnover is considered, I need to also take into consideration those GST incomes which are there in my personal file. Commission income, rental income, right, on which GST is paid. So see this particular case, 2,70,000 is rental income. It is not added in your audited financial statement sales. So I've added it here in table 9C50. So then it matches, right? So you need to keep these into consideration. See this slide?
Different entities.
No, it's the same entity. I am a proprietor.
No, sir. You said that it is the business.
Business income in my PAN.
Yes, sir.
I am PAN proprietor. Same PAN, rental income, same PAN, commission income. So when I'm filing my ITR, I have a tally business income, I have my personal tally. I merge both because I have to file the total income per PAN. So I'm a proprietor. So I need to accumulate all my GST incomes, even if it is not my business income, and see whether GST is paid on that or not. Many times people, because that money comes in savings account. Business income comes in current account. Many people, they may say, "Hey, ma'am, what are you doing? You're getting receipt in savings account. Who told you to charge GST?" No, 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 don't charge GST. Absolutely wrong. If you're registered under GST, if you're doing some whatever exercise which and getting a consideration under section 2 clause 31, that is a GST specific transaction. Maybe in your savings account, does not matter, but you have to add that. That needs to be. This slide has all the tiered structures of different ways of reconciliation of sale. Rate wise, B2B or B2C, export, exempt, etc. So you can go through this. Now inward. Now inward, book versus GSTR 3B versus GSTR 2B. We all know this. We do this. We in fact have to do this every month to file GSTR 3B. Are we aware of electronic credit reversal and reclaim statement? Yes, this has come from August 2023, right? So what does that mean? Electronic credit reversal and reclaim statement. We will see. Let's see these. These ITC claimed in GSTR 3B is more than ITC in GSTR 2B. Will there be an automated DRC 01C? Automated DRC 01C letter will come na notice to you that if your input claimed in GSTR 3B is more than 20% or 25 lakhs, right? As compared to the input available in your GSTR 2B, there will be an automated notice, system generated DRC 01C, right? Under rule 88C, 88D, I think, right? So do not claim input more in GSTR 3B as compared to 2B. We all know this is the law from 1st of January 2022. Section 16, subsection 2, clause AA, read with rule 36, sub rule 4. Ineligible ITC. Now, what do we do about ineligible ITC? We all know circular 170 had come. Are we aware of circular 170? From August 2022. So what does circular 170 say? All your input tax credit you have to claim in table 4. Then reverse it accordingly, permanent or temporary in 4B1 or 4B2. We all know this, right? So what is my slide saying? Ineligible credit, it needs to be reversed where in 4B2 or 4B1? It needs to be reversed in 4B1. This is permanent. ITC reversal as per rule 37. What is rule 37? Can anyone tell me?
180 days के
Very good. What is 180 days? I have purchased from my supplier on 1st of April 2026. I have not made the payment of the value of the supply along with the tax within 180 days. 180 days gets over on 30th of September. So 1st of April or the return which I am to file on 20th of October, basically, there what do I do? Exactly, I need to reverse what? The ITC which I have claimed earlier. Reverse where? 4B1 or 4B2? Very good, we all know this. This is 4B2. Now when we have reversed it, 30th of November has passed. After that, 30th November passed. Now I have made the payment in January 2028, for instance, to that supplier. But I have reversed it. I have claimed it properly on 1st of April 2026. When was the last date to claim? 30th of November 2027 for 26-27. But when did I originally claim it? April 1st, 2026. On 20th of May, I filed my 3B. And I reversed it when ma'am said in October 26. I made the payment and 30th November 2027 is passed. Today is January 2028. I make the payment, entire payment. Can I reclaim this input tax credit? Very good, I can reclaim. Why? Because there is rule 37. Yes.
जब पेमेंट करेंगे तभी
Yes. 2 years nahi, ma'am. When I have no unlimited time.
जब पेमेंट
Rule 37, sub rule 4, read with section 41, subsection 2. Ki once you originally claim a particular input tax credit and reverse it temporarily, after that you can claim it whenever you want. There is no limit to that. So section 16, subsection 4, time barring does not come in time of reclaiming an input, but claiming time barring comes. Very important. ITC claim on the basis of GSTR 2B, but not accounted in books. Hota hai na? Goods we have not received on 30th of April. Goods we have received on 2nd of May. But we have received the invoice in our GSTR 2B in the month of April. Are we supposed to claim this input tax credit? No. We are supposed to click pending. Or what do? We accept it, but we reverse it in 4B2. Right? Yes, sir. We will share the template, ma'am. We will share the template. So Here, what am I saying? That ITC claimed on the basis, so either use your IMS. Is IMS mandatory now or optional? Optional. But will it get mandatory? Yes, the times to come. So if you're using your IMS, click pending. Next month, accept it. It will and recompute automatically. It will come in your 4A5, right? And you claim it. So no jhamela of claiming it first, then parking it in your electronic credit reversal reclaim statement in 4B2, then the next month reclaiming it in 4A5 and reporting it in 4D1. Direct IMS, press pending. But tell me one thing, if I keep pressing pending, now is there a time limit for this pending input tax credit? I'm not talking about credit notes, I'm talking about normal purchase invoices, input tax credit on IMS. Is there a limit or will it lapse? It will lapse. It will lapse after 30th November. So if I have not accepted it, if it has not come to 4A5, and if I have not reversed it for it to be reclaimed much later, and if I've just kept pending, and I forgot, and 30th November came, all input gone. So in that case, what is advisable? Closer to 30th November, claim it, reverse it temporarily, as ma'am said, wait. Once you are eligible to claim the input, claim it. After 30th November also. Reclaim it, sorry, not claim it, reclaim it.
So there's
Yeah.
If there's some unknown party, we are unable to trace that.
Very good.
What we will do in that?
So in that case, ma'am is saying that in case in your GSTR 2B, her uncomputed GSTR 2B, unknown credit has come, means ineligible credit, for instance. Okay. Now what happens is, at that point in time, I can either press reject in IMS. I'll say both the things. Okay.
But it is related to our business.
No, does not matter. But if you do not identify that, then it is barred. It is section 7, means you cannot claim that. It is ineligible. It is not under section 16 subsection 1. Section 16 subsection 1 says business purposes, furtherance to business. You need to identify the vendor. Na? So first option for ma'am is you reject. Once you reject, what happens?
We can never claim it.
We will not claim it. And what will happen? It will go in the dashboard of rejected invoice. Now, will the vendor get the benefit of adjustment of his output tax liability which he's already paid? No. Very good concept. He's already paid to the government and you are also not claiming input. So, double benefit to the government. Government has collected tax from him and you have reversed the input, you have rejected. So, what's the problem? No problem. Second option. Ma'am says that IMS is very complicated. I don't follow IMS. 90% businesses are not following IMS till date. So, what will ma'am do? She will normal 14th of next month, GSTR 2B will be computed. I will not touch it. It will flow into my 3B. So once it flows in my 3B, the ineligible credit will be auto-populated where in table 4A5. Are all eligible, ineligible auto-populates there? Na? Then it is ineligible for her. She does not identify it. So she needs to reverse it in 4B1 or 4B2.
Sir, advisable 4B2. Why? Because later
Maybe later on that person gives me the invoice. Maybe later on that person, tells we identify. So initially you can park in 4B2. Later on, once you receive the invoice, then what you do is you put it in table 4A5 and 4D1. Alternatively, even if you report it in 4B1, sorry, no problem. If you report it in 4B1, okay, 4B1 is gone. So 4A5 minus 4B1 in 4C, you've not got the credit. It's not gone into your electronic credit ledger. 2 months later, that vendor comes, oh, yeah, identify, oh, he's my brother only. So he gives you the invoice. Now what will you do?
We won't be able to claim the credit.
You will have to put that particular amount in table 4A5 and 4B2 in 1 month, the next month or in the same month. 4A5 you put, 4B2 you've put 4A5 you claim, 4B2 reverse, 0. Then in the same month, again put in 4A5 and put in 4D1 or have 1 month gap. So what will happen is, you are inputting that particular invoice in 4A5 and you're parking it temporarily for 1 month. Next month, you are reclaiming it in 4A5 and reporting in 4D1, you've reclaimed. But there will be one problem. You have reported in 4B1, but that does not add on anywhere. So once a departmental audit happens to like 4B1 also, there is a lot of input, 4B2 also there. So you can make a note that 4B1, we have reported this by mistake, it was not ineligible, but there will not be any problem for you with this particular methodology.
So it is better to file in 4B2.
4B2, yeah. As ma'am said, ma'am is a like she's a better expert, she's answering everything. So, but this is a very good thing. Park it in 4B2. You can park it for as long, no problem. You park it there, electronic credit reversal reclaim statement, it is parked there, then you can reclaim it anytime. Not a problem. We've already discussed all this. 180 days. Acha, what is rule 737A? Can anyone tell me? Whether whether interest is to be paid when reclaimed after payment in January after 180 days. So, sir, when you will reclaim it, so interest you have to pay not during the time of reclaiming it. After 180 days, once you reverse, if you reverse it correctly in the GSTR 3B right after 6 months from the date of your invoice, you don't need to pay any interest. But if department intervenes or if CA intervenes and tell you that, sir, you should have reversed it in October 2026, but you are reversing it in August 2027. So you need to pay interest from when? Can anyone tell me? You need to pay interest because you've not paid to your supplier. Invoice was pertaining to April 26. I had to reverse when? I did not pay. I had to reverse in October 26. But my CA told me only during tax audit time, August 27. Sir's question is, where do you calculate the interest from? You will reverse in 4B2 in August 2027, no problem. But interest calculation is from where? It is from 1st April from the date of invoice. Is it from 20th May from the date of our GSTR 3B return? Is it from the 181st day? What? It is from the date you claim the ineligible credit or the incorrect credit, which is 20th of May 2026. So from 20th of May 2026 to 20th of August 2027, you will have to calculate interest and pay that interest by cash. Right? So what is Rule 37A? Rule 37A mentions, can anyone tell me what is Rule 37A? Very easy. We've done all this earlier. Rule 37A. This slide, let's see this notice. What does this notice say? My counterparty, my supplier, I've given recipient, I've given him tax, I purchased, but he ate up my amount. He did not file his 3B only. So if the supplier's filing status is showing no in your GSTR 2B or GSTR 2A, what is the last date until which you have to check? For 26-27, it is 30th of September 2027. If up to that date, if the supply, this is showing N, I'll just show you GSTR 2A, this one. So go to table number 18 of your GSTR 2A, there you can put a filter, na, N. So all these people, your defaulting suppliers, you reverse the input tax rate before 30th of November 2027. If you do so, you don't need to pay any interest. But if you do not reverse up to 30th November, you have to check up to 30th September of the next year, but reverse up to 30th November in your October return. But if you don't reverse, you will have to calculate interest from the date of claiming. But there is again a safeguard for that. If you have not utilized that input only, so do you need to pay interest if you've not utilized, an excess availed input? No, you don't need to. Rule 88B, right? Section 50, subsection 1, interest, right? So this you need to check. This is very important. Notices are coming left and right. Now, can notices come for this? Now, can notices come for this? Usually not now because this particular rule has come and section has also come. So in your GSTR 2B for the month of September, there is a table 5 which they have made, in which they mention that for the previous year 25-26, for in this table 5 for the GSTR 2B of September or October 2026, they will tell you which all suppliers are defaulting. So you need to reverse that. Right? Kindly check this. 180 days, we have already discussed all of this. We've discussed, these are all this thing. Achha, tell me one thing. You have a dispute with your creditor. This is the very widespread. Everyone faces this issue. You have a dispute with your creditor. You're like, paisa nahi denge, I will not make the payment. 1 year passes, 2 years passes, 2 years pass, 3 years pass. Audit happens. If audit happens, they see outstanding amount. 180 days crossed, so you will have to now reverse with input tax with interest, and you will have to pay penalty also, right? What if you've written it off? Written it off means written it back, means हम payment ही नहीं करेंगे उसको. So I had to make payment of 100 rupees to a vendor, but now I don't have that liability. Is that my income? It's my income.
Income.
Remission of liability is my income. So if it's my income, it comes in the credit side of the PL account. So during departmental audit or during finalization, whenever you will see a remission of liability, you need to first think whether you have reversed the input tax credit availed on the initial booking of this purchase or not. Because what's happening, in a way, indirectly, you're not making payment to the supplier within 180 days. So you're supposed to reverse that. Here, the 180 days does not come into the fore. You don't pay him at all only because you've written it back. This is a point, hidden point. And there, after 3 years during departmental audit, they will ask you to reverse this along with interest and 15% penalty. And you will not be able to claim any input also. This we've discussed all of these things. Electronic credit reversal and reclaim statement. Okay, can anyone tell me, is this hard locked? What is the meaning of hard lock? Let's see this particular, let's see this slide. What is electronic credit reversal reclaim statement? We just discussed. Whatever we are parking in our 4B2 temporary reversal, so that amount is our input which we will claim in the future. And when we reclaim it, what do we put in? We put it in 4A5 and 4D1. So 4B2 is the place where we park. When we reclaim it in 4D1. So 4B2 is the total amount which we are supposed to reclaim maximum, and 4D1 is the amount which we actually reclaim. When we report in 4A5, we know this. This circular 170 notification 14/2022 dated 5th of July. We know all of this. What now the thing is, in January 2026, now for this electronic credit reversal and reclaim statement, the department is saying if you reclaim more than the amount which is there temporarily parked in your 4B2. So if you reclaim in any month more amount in 4D1 or in 4A5, then the amount which you are supposed to reclaim, which you have temporarily reversed 100 rupees, but you reclaimed 120. So 20 will be negative. What will be negative? What is the calculation of negative? Closing balance is opening balance of electronic credit reversal reclaim statement, which is 0, or maybe of the previous month, plus this month's temporary parking, which is 4B2, minus this month's reclaimed in 4D1. So if this amount is positive, this means there is no problem. There is still temporary input tax credit which I have kept, which I will reclaim in the future, no problem. But if suddenly I tell the government that, sir, I have initially claimed 100 in 4A5, I've reversed 100 in 4B2. Fine. So my electronic credit reversal reclaim statement is positive 100. And in the next month, I reclaim in 4D1 and in 4A5 120. So my original credit is 100. I have parked temporary 100 and I reclaim in 4D1 and in 4A5 120. Is that legal? That's not legal. You are reclaiming more than you are entitled to reclaim, right? So 4B2 minus 4D1, that should never be negative. मतलब जितना खाता है टंकी में जितना पानी है आपका उतना ही तो पिएंगे ना. 4D1 आपका ग्लास है और टंकी है आपका input tax credit temporarily parked, which you have reversed temporarily, which you will claim. So what is the government saying? That if your electronic credit reversal reclaim statement balance means if 4D1 is more than 4B2 and the opening balance, if the balance is negative, then what will happen? They will hard lock your GSTR 3B. You will not be able to file your GSTR 3B. But has this been active on the portal yet? No. There is still a warning sign. But they had come up with this advisory in January 26, 2-3 months ago. We need to be very careful about this statement. They have come up with a very detailed advisory, which I have entirely put here. If you were to see this, we've already discussed this. These are examples. Let's just take one example here. Ideal is opening balance is 10, means temporarily parked up to the last month is, it should be 10. In my first situation, what? In the last month only I have reclaimed extra my 15, means my electronic credit reversal reclaim statement is minus 15. Means my opening balance is minus 15. Whereas it should be 10. This means how much have I extra reclaimed? 25? And minus 15, though I have extra, it's negative, and 10 ideally it should be the balance, positive balance. So 25 I have reclaimed in 41 more than what is there in 4B2. Simple logic, right? Now, ideal 4A auto population from 4B2 should be 70. Okay, fine. I have also put 70 in my 3B, no problem. Oh, block credit, car expenses, 10. Okay, I have reported 10, no problem in 4B1. Oh, temporary reversal, I have not received the goods only in that month. It should be 15. I have reported 15 for that month, no problem. Everything correct. Net ITC is what? 4A minus 4B is 4C. So 70 minus 25 is 45. And in that month, I have received goods of my previous month. So I have reclaimed 20 out of my opening balance and out of my current 4B2. So what is my current 4B2 balance in this incorrect whatever filing? Minus 15 is opening balance. 4B2 is how much? 15. Minus 15 plus 15 is 0. So 0 is your 4B2 balance and you have reclaimed 20. So it's minus 20. Will it invite a notice? Yes. But what should you do? Correct. How should you rectify it? Your ideal closing balance should be 5. So what will you do? What will you do? You will add how much? 25. You will add 25 where? In 4B2. So now new 4B2 balance is how much? 40. 15 plus 25. So this is 40. Let's calculate. Minus 15. Opening balance incorrect. Now I have reversed further. Means 25 I have put out of my pocket. I have reversed further. So it becomes what? 25 further reversal plus 15 reversing for the month. It becomes 40. So 40 is the 4B2 temporary balance minus or plus opening balance. So it becomes 40 minus 15 is how much? 25. And how much is the correct reclaiming of this month? 20. So 25 minus 20 is correct amount of 5. So when I say 25, I need to do further temporary reversal. So what does that mean? That means, what does that mean? That means that my existing input, if I have any existing input balance in my electronic credit ledger, I will either pay through that 25, or if I don't have any balance, I will pay out of my pocket. So that will be cash payment. What is the government saying? Make it zero or positive. Make it 0 or positive. And you have to do this. Is the most important point of my entire presentation. These are the next 10-15 slides. Because in the next few months, your GSTR 3B may be hard locked. And it may only and only open once you do further reversal in table 4B2 or rectify. Either use your input tax credit balance for earlier incorrect excess claiming, reclaiming, etc. So either use your existing balance of your electronic credit ledger, or if you don't have, rectified using your own pocket. But if it is negative at any point in time, they will not allow you to file 3B. If I don't file 3B, can I file GSTR 1 of the next month? If I don't file GSTR 3B of 2 months, can I issue e-way bills? Business? Shut. Because of hard locking. This is the most important part. Okay, so I have given several situations. This is one. Second is RCM ledger. Do we know what is RCM ledger? Very easy. What is RCM ledger? Logic, sochiye na. You are making payment of RCM. So where will you pay? In table 3.1D in GSTR 3B. You made 100 rupees of RCM payment. How much can you claim? Up to 100. Opening balance is, for example, 10 of RCM ledger. What does opening balance of RCM ledger mean? It means that I have in earlier periods paid tax under RCM of 10, but I have not claimed input till now. So I can claim up to 30th November. So 10 is the opening balance plus 100 I paid. So 110 up to that I can claim input tax credit in table 4A2 or 4A3. But I claim 150. Can I claim 150? Right now I can claim. They will give a warning sign. But 2-3 months, 4 months, 1 year later, when they hard lock your GSTR 3B, would you be able to claim that? No. You can claim only up to 110, means opening balance plus this. In case if it is negative, it is running negative balance, same thing. What do you need to do? You need to either it is a case of short payment in table 3.1D, add there or it is an excess claiming of ITC in table 4A, 2 or 4A, 3. Reduce that. If you don't have existing balance of electronic credit ledger, ITC, pay out of your pocket.
अभी तो वार्निंग दे देता है सर, रेट
अभी वार्निंग दे रहा है, लेकिन बहुत इंपॉर्टेंट है. दिस एडवाइजरी हैज कम. वो इन लोग एक्टिव नहीं किए बिकॉज ऑब्वियसली there are 99% cases there's negative balance across the industry because people they don't know. It's very complicated. 4B1, 4B2, 4D1. People are still not following circular 170. It's so complicated. So I have made a thorough, these case studies regarding this particular point. FAQs are there, which I've already discussed many. Obviously, this is a 300-page presentation. It can be a big fat book. Okay, so it's not possible for us to go through each and every slide. You can go through this, all of these slides. I made it myself from the advisory. I put my own case studies, FAQs. You can go through it. These will help you in finalization. Because see, even if there is a negative balance, you will receive notices. Okay, in abundance. Now, are we aware of Rule 4243? Rule 4243? What is Rule 4243? Common credit reversal, right? If I am selling rice, 10 rupees, and I am selling samosa, 90 rupees, 100 rupees total turnover, exempt supply rice, 10. So 10% of my total input tax credit, you have to reverse, but not the entire input tax credit, only the common credit part. So what is common credit? Common credit means that credit which you can't identify. You are using for both. Like for example, the light, right? Electricity bill is not there. For example, rental. This go down. I have rice also. I have samosa storing also. So the rent is common credit. I'm using for both. But if I'm purchasing some taxable items for samosa, so that I don't need to reverse. That is proper claiming because it is against our taxable supply. But if I'm buying rice to sell rice, can I claim input tax credit? I cannot claim input tax credit because that's an exempted supply. I need to reverse that. But common credit is a portion where I need to calculate and reverse. So I've given you these slides and a practical example also. See, credit which is exclusively related to taxable supplies, 100% eligible. Credit which is exclusively related to export supplies. The next slide it will come. आपका लैग बहुत लंबा हो रहा है.
नहीं, यहाँ पे चेंज हो गया.
Yeah.
वहाँ पे कुछ क्वेश्चन है सर.
Okay. Chat questions. Whether RCM can be paid by electronic credit ledger? No, sir. RCM can never be paid by electronic credit ledger. Things which can be paid by electronic credit ledger are self-assessed tax. Any tax which is assessed under appeals or maybe during investigation, voluntary payment, or during adjudication, everything, the tax amount, not the RCM amount, not the late fees, not the interest, not the penalty. Whether RCM can be paid by electronic credit ledger? No, sir, it cannot be. Whether interest is paid, I've already discussed this. Yeah, can we see this? So, credit which is exclusively related to taxable supplies means for samosa, which is taxable supplies, 100% eligible. It's not common credit. If I export, 100% eligible because it's taxable supply. But if I'm selling salt, if I'm selling, for example, rice, vegetables, so it is exclusively related for other than business purpose. For example, block credit. Now let's see for exempted supply for rice. I'm buying rice to sell rice, so 100% is allowed, right? Now common credit, we calculate common credit and then we calculate common credit. It will take some time for the slide to come. We need to calculate this, very important. And common credit needs to be calculated on an annual basis and on a monthly basis. Why have I brought this point? Is because on a monthly basis, you need to calculate how much you need to reverse. But you reverse it in 4B2. And then when you do it annually for the entire year, taking the entire year turnover, entire year exempt supply, when your actual figure comes in. So if that actual figure says that your input tax rate reversal should be more, it should be 110, but you've actually reversed across 12 months only 100. So 10 you need to reverse further. So in that case, what do you do? If for every month you reverse this in this 42-43 reversal in 4B2, No problem. For the month of March, when you are filing, what you do is you reclaim in 4A5 and 4D1 this 4B2, and the entire year true up, the entire year correct amount, you reverse it in 4B1 in one go in the month of March. So that ways you would be able to correctly provide the entire year's reversal. So if you you can go through this is very easy. It is very self-explanatory. You can go through these sums. Block credits, we are all aware of block credits. These are parts of notices. You will receive notices. So it's very important now during finalization. You see whether the furniture or the flower vase or these paintings or these lights which you have bought, are they actually the delivery address is your shipping address is your house or your office, or what is the use of this flower pot in your office? So you need to explain this because it will all be highlighted during GST audit. Take photographs of that, show it to the department later on that yes, this was used for my office and it has office, it's for my furtherance of business. So they will not contest it further. Okay, for discounts and all, are we aware of yeah, new circular which has come out? Circular 252, incentives, discounts. Are we aware that circular 212 has been withdrawn? Did we know that post sale discount earlier? Are we aware that post sale discount earlier we had to get a certificate from a CA? If, like for example, if I'm giving a post sale discount, you have sold 100 refrigerators, I'm the manufacturer, so I'm giving you a volume discount of for example some amount. Okay, so earlier what was the mandate? The mandate was that you will only be allowed this particular, like I will only be able to issue this credit note to you, or you will have to reverse this input tax credit only when we had an arrangement of this volume discount or trade discount before our transaction. That was first condition, section 15 subsection 3 clause B sub clause 2, which we will see. And second condition, what was there? That you need to match your credit notes with your invoices. Those both conditions are gone, amended, but it's not been notified yet. It will be notified. It was amended in Finance Act 2026 here in your 56 GST Council meeting. So now, what a simple thing. Post sale discount, which you need to do, you just need to ensure that you issue a credit note, fine. In the IMS, the other person does not reject it. He accepts it. So he's reversed it. Or if he does not, it can be pending for a month, that's not a problem. If he does not use IMS, automatically it will come and he reverses it. Still, one condition is there that if you are issuing a credit note for a discount, post sale discount, you need to ensure that the recipient has reversed that input tax rate. Then only you will be able to get the benefit of downward your tax liability adjustment. So those two onerous conditions have gone. So that's one thing. And second is the circular 212 has been withdrawn also, which I told you about needing a CA certificate to attest that your customer has actually reversed that particular input tax credit of more than 5 lakhs, or getting that certificate from your supplier that he has reversed. Because if you are issuing a credit note on post sale discount, so the supplier is reducing, he's getting the benefit now, he's reducing his sale, he's getting back the output tax liability, and you have to reverse your input tax credit, right? So now no more requirement of giving certificates and all of those things. But as you may see, with effect from, it is still ... So it has not been notified yet. So I have also put this CBIC new circular 25108 which has come. It is very important for us to understand that commercial credit notes, which are not GST credit notes, means accounting credit notes, no GST input tax credit reversal is required. That's one clarification. Second is, in case if the manufacturer gives any discount, I am a car manufacturer, you are a dealer, I am giving you discounts so that you are able to sell, but I don't have any tripartite agreement with the end buyer, with you. So if I'm just giving you dealer discount, so in that particular case, earlier what used to happen, the department used to contest that the dealer is giving some sort of a service, promotional service, incentive service, on which that the manufacturer would have to pay GST. And all of those problems were there. But now they have mentioned, if there is no promotional activity, branding, nothing, it is just a plain simple push discount Okay, and there is no third party agreement, means with the customer, that will be considered as just a normal discount. It will, no GST needs to be paid, it will not be added back in consideration. Very important clarification, very important. But if I am giving any discount and that discount is being used in the nature of a contract of branding, co-branding, sales drive, incentives, like like that, then the dealer is giving you a service of sales promotion. In that case, the manufacturer is the recipient of the sales promotion service. So there will be GST collected from the manufacturer and paid. All this has been clarified here. I put it here. This is extremely important. Also, intermediary service. Last point which I want to mention before we can close the session. Intermediary service. So since we are from the exporter background, it is very important for us to understand what is the change, and this has come into effect from 30th of March, because intermediary change, this amendment has happened for the place of supply for intermediary services, which was section 13 subsection 8 clause B. मतलब क्या हुआ, सिंपल मतलब समझिए ना, मैं एक फैसिलिटेटर हूं, I am selling, for example, 100 water bottles from where, West Bengal to, for example, where, Sri Lanka. Simple example. But I am the facilitator. I am not the owner of this bottle. I know the seller. I know the buyer. I am facilitating. So if I am a facilitator, I am an intermediary, right? We are aware of the intermediary definition. Okay, a facilitator who does not own, but he connects those two people. So पहले क्या हो रहा था? Earlier, what used to happen, which was the problem, section 13 subsection 8 clause B is the place of supply for intermediary services. So when you are doing an intermediary service of facilitating the export of these 100 bottles from India to outside India, but facilitating, you are not exporting but facilitating, you would not get the exporter benefit. Means you would not, it will not be zero rated. So what used to happen, for you to qualify as an export, for that to qualify as an export, section 2 clause 6 of IGST, what does it say? There are 5 conditions. One is the place of supply needs to be outside India. Supply needs to be in India. Recipient needs to be outside India. Foreign exchange, freely foreign exchange used to come, should come, and the entity should not be under the same PAN. Okay. So your place of supply, earlier what was the rule? The place of supply for intermediary service is Sir's location, which is Shialda. So place of supply is Shialda, West Bengal. And second thing is what? Place of supply, and he is registered in West Bengal. So even if he is facilitating an export of 100 bottles, he has to show as a local sale, and he has to pay CGST, SGST out of his pocket of 11%, 99%, 18%, 99%. Now what has happened? To make his business, because it is intrinsically related to export, so his services also gained the benefit of the zero rated service. How? Now they have made amendment in section, the place of supply rule of intermediary service. Intermediary service is still there, but place of supply, earlier where was it? It was in India. Now they moved it outside India. What have they done? They've put it under the default provision. What is default provision? Section 13 subsection 2, that the place of supply for default provision will be the place of the recipient of the service. Recipient of the service is the person who is in Bhutan, in Sri Lanka. So what is happening? Now place of supply service, place of supply of service is outside India. Supplier is in India, recipient is outside India. You are getting in dollars. It's exporter service. So now you can get refunds for that. See flip side. You have a foreign facilitator in UAE, Dubai, and you are sending goods. He does clearance, he does bill, shipping bill of entry, all those things. So you pay him $2 commission or something like that. Now what is happening? He's an intermediary. Place of supply for intermediary service is what? Service recipient. Who's the service recipient? Me. Because I am engaging that foreign facilitator. So if I am the recipient of the foreign facilitator service, place of supply is in India. Supplier is outside India. Recipient is in India. Importer service, section 2 clause 11 of IGST Act. You have to, oh, very good, excellent. You have to pay RCA. You have to pay RCA. Means the recipient. These are the two flip sides, and this has already started from 30th March 2026. So this is again GST 2.0 change, etc. There are many more things and all that. Since there's paucity of time, You can go through, I mean, I think we would have covered 50, we've covered 169 around slides at 283 slides. Others, you can go through. In case if you have any queries, you can ask me. See, I made a very exhaustive presentation with case laws, case studies, real life notices. Can we pay? I'll just go to the chat. Can we apply this intermediary service in case of patent charges received from foreign buyer? Thus, sir, that's tooling cost, wherein we receive the payment in for no, sir. That is tooling cost. See this. You are asking me about tooling cost. I will show you. For tooling cost in your industry, there is a big penalty in case if you are treating it as an export. I'll just show you. There is a notice also of a client. This is tooling cost. This is exactly what you're saying. Let's see, these are not tooling costs, these are patent charges. What is sir saying? Tooling cost in the sense that I send some samples. Or what do? I make some die or mold here in Havada, which I cannot move. Very huge. But that is for my foreign OEM. He owns it. But he will pay me. Na? So foreign inward remittance is coming. If foreign inward remittance is coming, the first thing which comes to the mind is what? Am I giving any service? Is it an export? If that person has shown it as an export, can anyone tell me the definition of export? Proper. Not the conditions. Export is simple. Any goods taken outside the territory of India. That mold and die of 100 kg, has that been taken outside your factory gate also? No. Can it be considered as an export? No. But you receive foreign remittance on tooling charges, patent charges. So what happens? Section 10, subsection 1, clause C. That mentions place to supply for goods without movement of goods. What does it say? It is the place where the goods terminate. It never moved only. That is Shalda, Havada. That is West Bengal. You are registered, the service provider here. So it is CGST, SGST you have to pay out of your pocket, or you have to charge to the foreign OEM. He has to pay that. So there is no relief for that. So sir, in patent charges, intermediary service is not applicable. That is a proper local supply. You can see these notices also, and the department is very keen on taking this as a local supply. We received the export order from UAE as per the delivery terms. The consignee is India SEZ unit. Okay, then we are need to apply the GST to invoice, and in this case we will receive the payment from UAE country. We received the export order from UAE. Sir, see, if you are supplying to an SEZ unit or an SEZ developer for authorized activities, that is also considered to be an export. That is also considered to be an export. So on that also you can claim refunds also. Does not matter if you receive the PO or export order from UAE, but if you are supplying it to an SEZ, and if you are satisfied all the 5-6 conditions, that you are in India, yes, section 2 clause 6. Second is that the goods have gone outside India, yes. SEZ is not considered as Indian territory, it's foreign territory. So goods have actually gone outside India, fine. Second condition is the recipient is outside India, yes, it's in SEZ. Third is you're receiving in freely convertible foreign currency. Sir, kindly check whether UAE dirham is listed as one of the 18 or 20 freely convertible foreign currencies, which I'm sure is yes. Then are you and the SEZ unit, are you guys under section 25 under the same PAN with distinct entity? No, you are not. You are working on P2P, right? You are a different entity. He's not belonging to your company. So in that case, this is considered as an export. So you can claim refund. You can apply. There will be a proper export transaction. There's no problem with that. So what was I saying? Yeah. So you can go through all these slides. These each and every slide here, is related to one or the other point for your finalization. For payment of taxes also now, then later on, if you were to see, these are individual points. For corporate guarantees also, related party transactions also, I've put all these things. Okay, later on, if you were to see from slide 258 onwards. So 258 to 283, these are all the summaries which we've discussed. These are all the summaries, like, which you need to see as pointers. And we've discussed all of this, or all the matter is there in this PPT. So it's an extremely powerful, detailed PPT, which if used properly, can be used as a checklist for finalization of books of accounts from the GST perspective. Also, before filing GSTR 99C, also before filing your GST October GSTR 3B and 1 return, and also before departmental audit. So kindly go through it, and in case if you have any queries, please do get in touch with me. I've mentioned in the last page, your slide, my contact number, my email address. So you're free to contact me. And in case if there's no other further question, so we can open the floor for questions. In case if we have any further questions, let me see. Thank you, sir. Thank you, Mangesh ji. Thank you for your active participation. Thank you, Vijay ji, for your participation. Is there any other question here also physically? Please do, you can ask.
Sir, I have one question regarding the e-invoicing.
Yeah, tell me.
Is we are what our accounting is done
Thank you.
on SAP, and through Clear Tax portal,
Okay.
the amount gets tagged in the GST.
Okay.
Now the sales, whoever is handling sales, they directly raise the sales invoice and generate the IRN. Now this is a repeated thing that we are noticing. It's a clerical mistake, you can say, where instead of IGST 18%, they're tagging IGST 0%. So what is happening there? In case of there's a line called packing and freight, there instead of 18%, they put 0%.
That's
So
wrong.
what is happening in the GST portal? There is a mismatch in the value of taxable value and invoice value.
We are more than that is the problem that you are making short payment of tax.
Yes.
Because assessable value, as ma'am is saying, if they're packing charges or anything, it's a composite supply. So composite supply is a supply wherein the normal course of industry, obviously goods will have packaging, loading, unloading. So
I'm talking about export invoices.
export invoice also, then it's even worse, because if that particular amount, if you have mentioned as 0%, whether it is actually not 0%, it is 18%. And if without payment of IGST, what the problem is that in case whenever you will be filing your refund in RFD 01, which is a practical case which I'm telling you, which I've dealt with also, when you file RFD 01, when you get an initial acknowledgement in RFD 02, you may get, but when you get a refund order in RFD 06, before that, what do they check? Shipping bill from IceGate. They check GSTR 1, table 6A, right? They check GSTR 3B, table 3.1B. They check your EGM. They check your bill of lading. They check your BRCs. All of those things. Now, in the shipping bill, port code, shipping bill date, all those things will match. But the amount in the shipping bill, the amount will show there, 18%, whatever there. But in your GSTR 1, where you find in table 6, it will show 0%, which is grayed out, basically, because you're not paying. But that will be a big problem. Your refund may be stuck.
But what we are doing is because
File GSTR 1A for all of those things, and kindly talk to your clear tax, or
and
don't do that. If by hand you edit an e-invoice, what will happen?
it's no more an invoice.
It is an e-invoice, but what happens? In your GSTR 2B of your, here in your case won't be because you are exporting, but for your domestic and all that, your entire IRN, it disappears.
Yes.
First thing. Second thing is, if you do any manual intervention or something, there will be a mismatch between your invoices and with your normal invoices. So that's not the correct way to do. There are two ways. Either cancel your e-invoice, first thing,
Cancellation time passes.
or issue a credit note. Nullify that. That's one thing. Second is make adjustments in GSTR 1 by yourself. So long as if you made adjustment 18% you put there, it's still fine. But your e-invoice, there will be a mismatch with your this thing. So they can charge you 25,000 per e-invoice for incorrect creation of e-invoice under Rule 48, Sub Rule 5. And this is indisputable. They will do that. For every e-invoice I'm talking about. So this can be a big penalty. In addition to that, there may be refund issues, which I told you. Penalty though is only one time, but refund if it gets stuck. And just for these manual things and all that, which I have seen, if any mismatch is there between GSTR 1, EGM, shipping bill, GSTR 3B, anything, then they will withhold it. You go for appeal. So the best thing is kindly sanitize, means kindly align your IRN API of your clear tax with your SAP. Talk to the developers, because this is an API problem, or this is manual your team problem. But this is clearly wrong. Thank you everyone for your patient hearing. I would like to close the session. In case you have no other questions, in case if you have any further questions, you can connect with me. Thank you for a patient hearing.
So thank you, Ishanji, for answering the queries so patiently
Thank you.
and for continuously for 2 hours. Ishanji is an expert in that. So
Thank
we
you,
just
ma'am.
have a
Thank you,
small
pleasure.
token of appreciation for you.
Thank you. Thank you so much.
আপনারা সবাই একটু সেটার পাশে গিয়ে
হ্যাঁ
দাঁড়ান।
একটু হ্যাঁ একটু
थोड़ा सा इधर जाओ।
আসছে সবাই
তুমি যাবে কৌশিক? না
Thank you. Thank
Thank
you so
you.
much. Thank
Thank
you,
you.
ma'am. Thank you so much.
You are very
Thank
good.
you everyone.
I loved it.
Arey,
It
thank
was
you.
not my subject, but I was enjoying it.
Thank you. Thank you so much. Thank you.